Welcome to the AI Energy and Climate Podcast, a special series from the DSR Network hosted by David Sandalow.
This podcast is underwritten in part by the U.S. Embassy of the United Arab Emirates. Its editorial content is completely independent, and the views expressed are exclusively those of participating experts. It is presented live, without editing. For further information about the UAE's efforts in the areas of artificial intelligence and technology, go to the website of the embassy at www.uae-embassy.org and search for UAE-US Tech Cooperation. We thank them for their support. We thank everybody who's supporting this podcast for their support, and we look forward to it developing and growing over time because the issue is so important.
This is the AI Energy and Climate Podcast. I'm David Sandalow. In the past year, I've spoken with lots of people about data centers and electric power supplies in the United States. I haven't spoken with anyone who's studied this more deeply or is doing more about it than Chris James. Chris is the founder and CEO of Engine Number One, an investment firm based in San Francisco. He was in the news several years ago when Engine Number One led a successful campaign to place 3 independent directors on the board of ExxonMobil. He has more than 30 years experience investing in and building businesses across many industries. Chris, welcome to the AI Energy and Climate Podcast.
Well, thanks, David. Super excited to be here. I love the work you guys are doing. So, looking forward to it.
Thanks so much. I'm looking forward to it. I've really enjoyed talking and looking forward to a conversation ahead. And maybe just start. What's your background and why did you found Engine Number One?
So the background, I originally started in the public markets. I'm focused on multiple areas and quickly moved towards investing in technology. Just immediately, the nonlinear pace of change was just really exciting, and that became even more so when I was obviously there as an investor. So I started in '91 when in '94, '95, the beginnings of the internet really started to really shape what I thought the opportunity set was. I moved to California in '96, really after realizing that this internet was going to be what I thought the biggest investment opportunity of my life. So I moved out of California and been here ever since. Mostly really focused on the hardware side. Semiconductors were what was my actual area of focus for a very long time. And back at my old shop, opened up an office in Japan and Korea and Taiwan, all really around that hardware infrastructure and ecosystem. And so been really a student of the semiconductor industry for a long time. And then on a personal side, I grew up in a coal mining town in southern Illinois, and always kind of fascinated by energy because of that. And started investing on the private side in energy, actually in like '99, and been doing greenfield and brownfield development projects separate from what I've done historically in the public markets and technology, for a really long time. And so the AI was really the convergence of those two worlds of energy and processing, and to really form compute. So I think we've been very focused on this for a couple of years because I think we just have uniquely kind of experience in both areas of those.
The Engine Number One website says that you founded Engine Number One to help with the reindustrialization of America. So say a word about what you mean about that.
Yeah. So I think on a little bit of a personal note, the area in which I grew up, we really lost most of our manufacturing jobs in the 80s and 90s. We lost our tire factories, our cap factories. We lost a lot of manufacturing and as that went away, I think that very much kind of shaped my view towards the importance of having a very strong manufacturing sector in the U.S. I mean, I saw the kind of the personal side of that, but also I think over time been very kind of attracted to the idea of having design and build at the same place. And from the semiconductor side, again, to reiterate that in an even larger degree, we owned semiconductor manufacturing in the 70s, and we lost that slowly to Japan, then Korea, then Taiwan. And I think, while we have a great design ecosystem, I've been very focused on semiconductor manufacturing and having leading edge technology here in the U.S. as something that is like an important, a very important base to have in order for us as a country to continue to be successful. I very much believe that there are an enormous amount of side benefits by having manufacturing here in the U.S. with your design, and not just from a social perspective, because that does allow very strong large middle class and social mobility. It also, I think, is important for long-term competitiveness of the United States for us to have that class of people really being able to build all of the magical things that are designed here in Silicon Valley and elsewhere in the U.S., but obviously Silicon Valley being a little closer to home here.
There's big challenges in bringing semiconductor manufacturing back to the United States. Are you optimistic about our ability to do that?
I do think there's a way to do it. It's something that has been a kind of a side passion of mine for a long time. I do think that there is a way to do it. I think Silicon Valley innovates really well. When they see a problem, they know how to fix it. And I think there are some ways in which we can be successful. I mean, obviously we put all our eggs in one basket with Intel, and that has been a complete train wreck for the past 15 years. So we're happy to see some changes kind of take place there, but it's not enough. It's not fast enough. But do we have the people capable in the United States of building leading edge and designing leading edge and continuing to move forward? 100%. Do we have the packaging technology? Yes, that is the place where we have not ceded that lead yet to overseas. So the ability to take the people that we have, the process tech that we have, the packaging technology, we have the right mix and the right ingredients. Now it just comes down to the right people to actually lead that effort and to coalesce around the idea that we can eventually catch up and surpass anyone else out there. And I remember all the people leading. Go back to Morris Chang. He was schooled and trained in the United States. We just didn't get. But
Morris Chang, the CEO of TSMC.
The chairman founder of TSMC.
Yeah.
So we unquestionably have the ability to do it. Now it's just really, do we have the companies and the will to do that? And I think that books like Chris Miller's have gotten people to focus on this. And I do think that we have the possibility to do that. Now, we should be very, very focused on that. And I think so far I'm optimistic.
That's encouraging. Well, you've been very busy lately. You've got some big deals with Chevron and with Crusoe that have been announced, and I want to get to those. I know some of our listeners are going to be keen to hear about those. But before we talk about those deals, though, I thought maybe we'd just talk about the big picture with data centers and electric supplies in the United States, and to frame this particularly for listeners who may not be as familiar with the details. What do you see as the gap between the demand for power for data centers in the United States and the available supplies?
Well, I think maybe taking a step back in terms of like general demand for power. I think traditional data centers have been growing 4 to 5 gigawatts a year of demand consistently for the last 5, 7, 8 years. You now have general reshoring, manufacturing, industrial, and EVs probably now have gone from zero growth to probably somewhere between 7 and 11 gigawatts a year of demand. And then you have AI, and AI clearly has the most volatility on potential future demand, but that can be anywhere between low double digits this year, and ramping to somewhere in the low 20s of gigawatts demand a year, for the next fill in the blank number of years. I don't think any of us know, but I think you feel pretty good about that over the next 3 to 4 years, just based on what everyone land purchased, interconnects filed, capital already invested. That's going to be a number for the next 4 years or so. And so you add all that up, and it's incredibly hard to find where all that supply is going to come from, and especially the traditional data centers and the AI are 24/7 power, and we shouldn't fall into the trap of assuming all power is created equally. The industrial loads, the EV loads, those can all be shaped and really matched towards renewables and 2-hour battery fairly well. And so I suspect if we match those two up, that's what will happen. But the hyperscaler loads are totally different. And once you get into 24/7, 3 to 5 nines reliability, there's really not that many options that you have.
I want to dig into both the demand and supply part of what you were just saying, but on the demand side, on the point you were just making, just say a word about why data center demand needs to be 24/7 and the reliability requirements of the data center developers.
Yeah, so maybe separate it out between classic data center cloud type demand, which is like that 4 to 5 gigawatts a year. That's just basically using Microsoft Outlook or using any of the services that we're used to using from the growth of cloud computing. And so that does have some variance, obviously, more during the day in the United States, less at night. And so that does have variance, not perfectly matched with batteries, but eventually you get a 6-hour batteries or longer form that could partially work. AI compute, on the other hand, training runs run in 24/7, and inference or test time compute or some of the other more variable components, they're more 24/7, but they're not as critical as classic cloud compute, meaning that there are parts of inference where that you don't need 5 nines. And so I suspect that where we chip away at the efficiency is going to be on places where you definitely don't need 5 nines, where you're able to go down to 2 nines, or 99.8s or something like that. And within AI training, I think we'll do a better job of scheduling and figuring out how all those work within the greater ecosystem of the grid. So there are areas where we're unquestionably going to get dramatically more efficient. The problem is, of course, is that the demand for AI compute does seem like it's generating an enormous amount, more than the capacity actually exists. And so I think we're seeing a spawning of new applications every time we hit a new level of intelligence. And those applications then, as compute costs come down, we see greater use of those. And so in my 30 plus years of technology investing, I think it's always a fool's bet to assume that the demand will not be there if the cost to compute hits a certain price. And what that cost to compute actually is, I think that's a little bit unclear. But it's going to be different for every application that gets generated from the intelligence of these models. But the pace of innovation on these models is quite extraordinary, both in terms of efficiency and intelligence that's being created. And I mean, if you look at the infrastructure right now, it's wildly stretched. I mean, we're not seeing the most recent versions of Anthropic's models or OpenAI's models be generally available on most of the compute platforms, because there is just not enough compute right now. I mean, even DeepSeek, and there's not enough compute for everyone to use these. And so right now we're completely compute constrained. And I suspect that is going to be the case for some period of time.
So just to follow up quickly on the interruptibility of loads for a moment, I've and then come back to some of the other points you were just making. I've heard some people say that training loads are inherently interruptible. You can batch them, and other people say it's not really true because if you have an expensive data center, you're going to want to run at 90, all the time in order to capture the cost capital. Do you have any thoughts on that?
So the literally the brightest people I've ever met are focused on this problem. So I think that what we'll find is over time you'll be able to schedule training runs in a way that allows pockets of that learning to be pushed down to like a smaller core and then expand back up. But I mean, there have been. If you listen to the Dwarkesh and had Jeff Dean on there, he talked about advances that they're doing around the ability to train over multi-center clusters. I think it was 20 or 30 miles. And these are all things that not too long ago would not have been feasible or possible. Like the engineering talent focused on this. So I assume that each of these loads will add in more flexibility over time, but that still doesn't. There's only so much flexibility you can add in because you want to throw as much compute at these problems, at these models as possible. Because as we've seen, whether it happens in training or test time compute, more horsepower leads to better models.
Yeah,
and especially frontier models. You want to throw as much as you can at this. And so at the end of the day, these models, are a function of data, algorithm. And it's a simplistic way because obviously within algorithms that can encompass all sorts of things from, how efficient your model weighting is to, like how good your mixture of experts model actually is. Like there's all sorts of things within that.
This gets to the growth and demand point that you were making. And there's been a lot of discussion about this. I think a year ago, not everybody in my professional world knew the term Jevons paradox, but now I think everybody is talking about Jevons paradox, which is the rebound effect. And as things get cheaper and more efficient, people use more of them. And do you have any thoughts about how that applies in this situation? I mean, you started to discuss that earlier, but do you think as compute gets cheaper and cheaper, we're just going to use more and more of it, or at some point will demand fall off?
Oh, I don't think demand will fall off. I think what will happen is we'll find the explosion of applications at a certain level of price per unit of intelligence, like that will definitely continue. Now, it doesn't mean we're not going to go through ups and downs. I mean, I lived through the 2000 .com bubble bursting, and we lived through all the CLECs who built all this fiber bursting. Like all of these things kind of happened, but the internet demand kept on exploding. And as we saw huge price drops, it continued to explode. And then ultimately, we built a whole new set of applications on the intelligence that became so cheap. And we'll continue to have cycles in this area always. But I do not think that we should really. I mean, intelligence is kind of the scarcest resource, and the more we can put it out, we can use it at a low cost. The more demand there's going to be. There's in this world there's much more a shortage than of intelligence than a excess.
How about the commercial side of that? There's a piece that's written called the $600 billion question, that where the author says that in order to justify the capital expenditures of hyperscalers in the past year or two, you'd need to generate $600 billion a year of revenue in order to justify the capital expense. Granted that intelligence is the scarcest commodity, but can the revenue really justify all this expenditure?
So I tend to not agree with that thought process. So if we look at the size of the hyperscalers' reach, and whether it's somewhere between 1 billion and 4 billion people use each of these products on a monthly basis. And then you look at what is the ability for each of these companies' business models, and what's their ability to sell the intelligence that they create via whatever methodology they do. So it can be ad sales, it can be phones, it can be, take your pick. The ability to monetize this intelligence among these scale companies is extraordinary. And I go back and look at the very beginning of when we started to see the penetration of machine learning back. I think it was 2014. I remember there's a time period where a lot of the big internet companies like Google revenue growth had slowed to like low double digits. And then we saw this huge explosion in their revenue growth based on their ability to monetize the huge data sets that they have. And I think each of the large hyperscalers are looking at how they can monetize these huge data sets. And this is the way to do it. And having the ability to monetize off relatively small changes in like click-through rates or sales conversions is extraordinary, and is done at a margin that is like not 100%, but very, very high. So I think these companies are really focused on the different ways. I mean, if you're Google, you're thinking about this not just in terms of search, you're thinking about it in terms of Google Cloud, you're thinking about it in terms of Waymo. I mean, there are multiple ways in which they can monetize this intelligence. And Meta, the same thing. OpenAI clearly just, as brilliantly pushed out a consumer product that has quickly taken 80% market share. And Microsoft clear path to monetization. I think that this portion of the argument has been wrong and is way overblown, that there's not going to be ways to monetize this intelligence. I mean, these guys all have huge like customer bases, huge information advantage. To think that they can't convert that in a business that they understand really well, I think is kind of crazy.
How about large enterprises that aren't hyperscalers, but people in different business lines? Have you thought about that and whether this is going to be useful for them ultimately?
It is. I think that's going to be slower because you have to re-engineer your process inside an organization to take advantage of this. And doing business process re-engineering, like we did this when we moved to client server. We've done this when we moved to the cloud. What happens is it starts pretty slow, and then it's kind of the classic adoption rate where we'll get the early adopters in AI, and then the entire firm will be taking the tutorials on that, the how to use for best results, and then we see just a chugging of adoption, just like the cloud. I mean, how many companies swore up and down that they would never move more than 15% of their computer load to the cloud? I mean, I was on calls when JP Morgan would say that back, 15 years ago. And, fast forward, everyone's going to over 50% of the cloud. I think here, the adoption of intelligence across the application ecosystem, it will be slower because you don't have, inside of Meta, you have, obviously Zuckerberg, who's very focused on the tech and how to do this. And he can kind of push this out to all their users. Inside of an enterprise, that's harder and slower to do. So I think that will take time, but ultimately, these productivity tools are going to be, I think, spectacular. I mean, I'm sure you do the same thing, but my ability to use ChatGPT to get answers to questions, as a matter of fact, the original idea that when we looked at the power side and firming power, came from using ChatGPT. I looked at, because I had no idea, what would it cost to if you were using, I think I was using a G Vernova large scale frame turbine. If I were to put in $2 gas, what would that be for cents per kilowatt hour in terms of cost? And it was like 2 cents. And I'm like, I'd much rather be long 2 cent hour than $2 gas. And like it would have taken me. Well, actually, on traditional search, I couldn't find the answer, and so I did this, and it came up in 2 seconds. Like we're going to spawn a whole set of the ability to execute off of ideas because of this intelligence. So I'm confident that is going to continue.
I've absolutely had the same experience, but I mean, in all parts of my life. I mean, for climbing the learning curve on topics that I don't know that much about is incredibly useful. I've used it to diagnose a minor medical condition.
Yes.
Before talking, it's amazing how impressive and how useful the answers can be. Just Chris, just one more question on your point about hyperscalers, and then I want to move on. I take the point that hyperscalers can monetize this with kind of improved click rates and that type of thing. Do you think that's true forever, basically? I mean, does this justify continued indefinite investment in intelligence? Or does at some point this reach a limit?
Well, I think that in Silicon Valley, the founder-led companies are being the most aggressive, and they're being the most aggressive because they, I think, understand that this is an existential threat and opportunity for their business. And I think they're spending this money now, and there's certainly going to be some uncertain spend. I'm sure they don't have a line of sight on what the return on capital employed is going to be for every one of their dollars. But they do have the benefit of trusting their instincts that when they see something as big as this and they look at what they have as assets, that there are multiple ways to win. And so I would bet, and obviously don't know, that they find new ways in which they can apply this technology to their business or to ancillary businesses, on a weekly, quarterly basis. Mm-hmm. And I don't think we can underestimate when you have a founder who has the ability to marshal a huge organization, huge engineering talent, to take advantage of this, that they're going to spend money because they know that this will ultimately have the ability to guarantee their success over a very long period of time. I mean, if you're a founder, you're thinking, the next 20, 30, 40 years. And if you're a founder involved, still running the company, then you're going to be thinking 1 to 5 on top of the 30 to 40, 50 years. And so I think that some of this is like we should. I think I inherently trust someone who has very strong economic interest to be successful, to focus on spending money on areas that are going to be successul. Show me the incentives, I'll show you the outcome. I think that at the end of the day, as and the older I get, the more you realize, at the end of the day, as an investor, what our job is to find the right people and have incentives that are aligned with long-term value creation. And I think that's what Silicon Valley does a phenomenal job of, is finding the right people, aligning incentives, and let them go. It doesn't mean some stuff's not going to work. If some stuff's not working, they're not trying hard enough. But I do think that this is what's made us so successful in an area where you don't know what the outcome is going to look like in 5 years. But if you keep charging ahead, you're going to ultimately find ways in which to monetize a lot of this technology.
Okay, one more question on the demand side for data centers. Then I want to talk about the types of power supplies that we're going to use in the United States for this. But there's, as you said earlier, enormous number of requests in the interconnection queue, applications in the interconnection queue right now. Presumably, some of those are phantom requests, right? Yeah, and how do we think about that problem? There's by phantom requests, I mean the hyperscalers are putting, if they need 3 data centers, they're requesting 6, and the expectation that only 3 will make it through. So how do we judge that?
Well, I think we should define what does an interconnect get you. I think for a long time, not just hyperscalers, but everyone really thinks about interconnection as power. And what interconnection really is the ability to get power that's been generated someplace else. And so I think there's been an enormous amount of demand for interconnects to pull power from the grid. I think there has been virtually nothing built in the U.S. that's 24/7 power. And so I think that there's a phenomena where, by our estimate, at some point in 26, we have absorbed most of the excess power that sat in the system that could be tapped via an interconnect. At that point, we need new build in order to satisfy demand. And of course, in the process of taking the slack out of the system, you set up the real ability for price spikes to happen within those regions. And so you take it, what we've seen in PJM in terms of capacity payments, or what capacity prices are. You look at reserve margins in MISO, and like we're getting very close to the edge there. I mean, we could have brownouts this summer. You look at CAISO, California, and the cluster that our power market actually is, and the price, how much prices have gone up. I mean, we have this situation in varying degrees across the entire U.S. system, and it only takes, when you're on the edge, it only takes a small amount of excess demand versus supply, and you see an exponential change in prices. And I don't think there's anyone who wants to see that. I mean, that is the core of our competitiveness as a nation, is our power prices. And so that could cause some real regulatory change if that happens. I think we have to be able to build new power gen, like period, full stop, this 24/7. And like we're going to have to see all groups move off this ideological bent that anytime we add power, that power is going to be a impact to the environment that does not justify the build of that.
So what kind of power do you see us building in the years ahead? Natural gas, nuclear, renewables, something else?
I mean, I think this should be an all the above approach. I think that this is just practical kind of, I think, common sense that we're going to have to build all sorts of power. And I mean, nukes are obviously, this is what's captivated a lot of imagination. Nukes are really great, but they're not available. And they're really expensive. And we're going to see SMRs, roll out sometime in the next 10 years, but they're really expensive. I mean, we're talking, I think the early SMR PPAs are probably going to be above 40 cents a kilowatt hour. And so that is not competitive with gas and plus CCS at all. It's going to be 3 to 4 times more expensive than gas plus CCS, at least 3.5. Over the next 10 years. And so, gas plus CCS is the most competitive of the 24/7 solutions. But for other loads, you certainly want it to add in renewables. I think there should be broad agreement. We want the cleanest and cheapest power. But we can't get zero cost and we can't get zero emissions. So let's try to find this balance that can satisfy the demand that we have. And I believe that in many cases we have not thought about the problem as the global problem it is. If we don't build new capacity and that manufacturing moves to China, their grid is 2x the carbon intensity of the North American grid. So I don't think that's a win. If like we do in California, we decide we're not going to allow oil and gas production, we don't build new gas power plants in California. We instead buy coal-fired power from Utah. Like there's just a lot of nonsensical behavior that takes place under the guise of ideologically correct views.
Let's take each of these resources and talk about them. So first, natural gas. A big issue right now with the availability of turbines, right? And the supply chain for combined cycle turbines is constrained. How do you think that affects the scale up of natural gas for data centers in the years ahead?
It definitely impacts it, and the ability to add more than what they've each of the big turbine makers, MHI, Siemens, and GE Vernova, have all announced capacity additions plans, but that's kind of it, for this decade. So like what we're going to build as many as we can and do them as clean as we can this decade. But you're right, that is a constraint. Hopefully it drives innovation across the hyperscalers to get more efficient. I think maybe just to put a pin in that, I do think ultimately this comes down to what is the cost per unit of compute. It's not going to be just the cost of power and the cost of compute. And it's going to be what does the carbon intensity of that compute look like for most of these hyperscalers who are very focused on this. And so I think we should think about it in those kind of broad categories of, what did you need? Speed and reliability. You need carbon intensity and then price. And you toggle those based on what's actually available. And for example, if building a gas plant in Virginia is very different than building one in Texas, in northern Texas, because you don't have the geology for CCS in northern Virginia, but you do in northern Texas or Louisiana. And so and conversely, in some places like the Dakotas or Wyoming or Oklahoma or Texas, you have great wind resources which you can use that are very cost effective, and which we should in order to help do this. And we have solar resources that are really productive across Texas, Oklahoma. As you get further north, a little bit less PV quality, but you do have the ability to have very high quality resources, very low cost. And then, with that, the place where we're probably seeing the most innovation and a potential drive down cost the most is on the battery side. And there are some just spectacular minds who are focused on the battery side. Whether it's just scaling lithium ion or whether it's going to the sodium ion or the iron-based batteries. And we're seeing real innovation here, and that I suspect we'll see more, because we do need to solve this 24/7 problem. Now, we're not going to see the scale that we need in the next 5 years on batteries to be able to do this, but in 10 to 15, I would bet yes on this. But again, I think this is a place where we do have to think about all the above approach, and think about and understand that innovation will happen. And while we do have a limitation on turbines in the short term, I'm the run rate that we get into, in the early part of next decade should be able to support the demand that we see, and along with these other new technologies that can layer into the whole energy stack.
We've been doing some work consistent with the points you're making on innovation, and in particular looking at the ways that AI can help accelerate innovation and batteries and other places. Is that something you've thought about? Do you have any sense of the extent to which these new AI tools can be useful there?
And David, I don't think you can stress this part enough. AI is the greatest problem-solving tool in the history of mankind. And so for those who are concerned about the carbon budget for AI, I think that's crazy. That we should spend those carbon dollars first and foremost towards AI compute, and turn down the temperature of your house. That's not solving any problems. Take your pick on what other energy usage that carbon is applied to, and focus on lowering that. We definitely we should put this incredible problem-solving tool front and center with where we direct our energy usage, because just think at how poorly we've addressed climate change as a problem, right? And you and I have spoken about this before. Is there a great stack of cost to abate, highest to lowest? No, which is crazy. And so we both know there are the cents per CO2 ton equivalent options out there. Methane's one of the easiest ones. And then there are thousands of dollars per cost to abate options that we're all doing. And I'll use the school bus example in the IRA, where we electrify school buses. We're spending a couple $1,000s a ton for that, and we're not spending it in the cents per ton equivalent on methane with oil and gas. Or we're doing it more now, but we used to not do that. So this is a problem that AI will be able to unquestionably in the next couple of years give us that full stack of what is the cost to abate, and then we can dedicate resources in the most efficient way possible. That is a great use of carbon, and one that I'm sure we're going to do. So I'm super optimistic about AI as a problem-solving tool, and we use it this way now, and the results are spectacular.
And just to plug some of our own work, we've just done the second edition of our Artificial Intelligence for Climate Change Mitigation Roadmap. It's got 17 chapters and 334 pages on this topic for anyone who's interested in it. And it's sponsored by NITO, as a sponsor of this podcast. And we're really digging in deep on this topic. And I couldn't agree more with what you just said, Chris.
To be honest, I didn't make it to page 334, but it is a great report.
Well, thank you. I appreciate that. So let's get to what you've been doing in Engine One, because you've been really busy, and you announced a big deal with Chevron, which I think is of interest to a lot of people. Let's say a word about that deal and what your plans are.
So yeah, sure. So we formed a partnership with Chevron to really build out this and deliver a solution that customers, I think, really need. The idea is to build a customer-driven energy platform that allows the AI infrastructure to be built and powered, and allow the companies out here in the Bay Area to do what they do best, which is to innovate. We want to provide that power platform, and we think that new build is the way to do that. And we imagine delivering a complete power stack, with gas as firming capacity, and then have other renewables on top of that, and add in other things like SMRs over time. So, we found that we work together pretty well. I think, to their credit, they've shown to really be flexible in how we address this problem, and shown that they're willing to go fast and break things in the process. Which, as you can imagine, for a company that is, it's imperative that things don't break, right? And that we don't have any fatalities. That being able to do this while what we're talking about are not really life or death issues, but can have some ability to adapt their culture to this sort of pace. So that worked well. And then we same thing with GE Vernova, where we're partnered with them on this as well, to where we're working to try to solve these customer problems. And I think for all, there's a lot of things that we can learn from the scale of these companies, and the processes that they run. I mean, they're obviously very process-oriented companies. At the same time, I think the speed of that what we move at is traditionally different than the speed of large companies. And at the end of the day, the product in which we're selling is speed. I mean, we're selling power, reliability, and a stack of solutions that over time can both deliver power and decarbonize in a very quick manner. And so all of these things that have to kind of come together in order to deliver a product, I think the customers want. And so that's the team we put on the field. So we've been pretty excited and learning a ton every day.
Well, congratulations. And so at the end of the day, the goal are then data centers powered with natural gas and CCS, supported by your team in Chevron and GE Vernova.
Correct. I think so. We haven't picked our exact sites yet. We know where we're going to right now. There are a few sites in the Northeast where CCS, we're exploring. We don't know yet what the option is, and all the balance of the sites. We know that's an option for our customers, and so. But we're sorting through all this right now. It's super exciting, and the hyperscalers have an enormous amount of motivation to get this right. And I think ultimately they're going to be the drivers of successful CCS. I mean, that's never really gotten off the ground in the U.S. And I think that they're going to be the companies that actually enable that to happen because they can afford it. Not that that's the sole reason, because I think culturally they all have been very focused on how do they lower their CI over time, but they are people who are intellectually curious and want to drive forward and have those goals, and so we want to support that as much as possible.
It sounds like you're optimistic about the cost curves on CCS. Do you think it's going to be an economical technology?
Much more optimistic than I was when I started this 9 months ago.
Why?
More optimistic. The cost structure is coming down, and there have been some innovations. There have been a couple companies that have really kind of been driving this forward. There's they're just not. I'm not under NDA, I don't think, with these guys. There's like Ion and Entropy who have been showing. Ion has a test plant here up by Sacramento. I think the Sutter Energy project. They have one they're doing over in the East Bay in Antioch. Like there are the California actually has phenomenal geology for CCS. So I think that's the pace of change there has been great. So I'm very optimistic there.
So, and I'm guessing there's some listeners who first heard about Engine One and you've from your campaign with ExxonMobil 3 years ago, in which you put 3 climate conscious directors on the board of ExxonMobil, or you led a campaign to do that with a very small percentage of XOM stock, and now see you doing a deal with Chevron. They may have wonder about kind of the through line from fighting an energy company or working with an energy company. Could you explain your thought process on that?
Sure. I think just there is what our messaging was with Exxon, and then there was what Exxon said our message was. And so, what we felt was at the core of the campaign was that large oil and gas companies needed to address change, that their customers wanted to decarbonize, that their customers wanted new solutions to the problems that they face, but you needed to do this in a effective, value creating way that aligned with your own core competencies. And so we were very careful not to be prescriptive about what that was, because obviously we were not inside of ExxonMobil. We felt that from the work we had done, that wind and solar was not going to be a place where they were going to add any value really at all, and be able to create value, even with their trading business. And frankly, another reason to not be prescriptive is because we were unsure what an oil and gas company should look like in 2035. And so we certainly didn't think that it made sense to be prescriptive when we didn't know that. But we did feel that management needed to be held accountable for the capital spending that they did put in place, given the range of potential outcomes are so big for what the world was going to look like in 2035. And so capital discipline was an important part of this, and focus on projects that weren't mega projects, which tend to destroy an enormous amount of value. We had climate conscious people, but climate conscious because they felt that the desire, and again, listen to your customers. If your customers want to decarbonize, then you focus on decarbonizing. And I think in many cases, their customers were focused on that, and still are. And so therefore, you should take that into account in what you're spending money on and how you hold management teams accountable for creating value. And that's what our campaign was about. And I think, as we've seen, Exxon dramatically outperform, by multiples of its peer group post our campaign, that has been successful. I think that from here, especially with AI compute and the size and scale of this, it's a little bit more clear on what an oil and gas company should look like. It's not perfectly clear, but it certainly is. Large scale power with CCS plays right in the wheelhouse of an oil and gas major. That is all their core skill sets. Doing a couple hundred megawatts into the grid is not at all consistent with their core skill sets. And so I think that alignment started to happen. So I think that all of these companies are full of just incredibly talented engineering people, and I think that to use that in a way that takes into account the change that's happening across the energy ecosystems, and to just get into a mindset that the world is changing and let's find ways to take advantage of this and create value during this change. That is like the simple mindset I think they all should have. And when you do that, I think all sorts of things pop up, like AI compute.
Chris, you also have a new deal with Crusoe Energy. What's that all about?
Yeah, so Crusoe is a company that I've known for quite some time. The Cully and Chase, the founders, have taken a kind of energy-first approach to building and satisfying, cloud providers, hyperscalers, or smaller cloud providers. And we were down visiting the site which they're doing in Abilene, Stargate, and really, really impressed with their engineering talent, the power orchestration, their design build capabilities, and we felt we wanted to have a partner with us to be able to offer really a complete solution. We can provide the generating power, we can provide the power orchestration, and the build, along with obviously all the electrical equipment in order to make that happen. So we felt that was a powerful combination.
Well, and we're starting to get towards the end here, Chris, but there have been some other big announcements in the U.S. for major builds. On his second day in office, President Trump brought into the Oval Office players for a big announcement called Stargate, and ADQ and Energy Capital Partners have made announcements. Any thoughts on these big announcements?
Yeah, I think that there is clearly, I mean, we live in an incredibly well-functioning capitalist society, one that sees opportunities like this as the ability to go out and create value with the size and scale of these builds. I think that we're really focused on a lot of the nuts and bolts engineering of this. We're looking at this less as really just financial sponsors, but more in terms of how do we build a incredible company. So I think these large alliances, these are big pools of capital that are going to be necessary in order to build out this infrastructure. What we're focused on is actually building out this infrastructure. Mm-hmm. So I think we're looking at this more as operators than financial sponsors.
And any plans for the years ahead you can share with our listeners, or any news you want to break?
No, I do think that the ecosystem, which is somewhat fragmented now, between power, between construction, between data center design, between processors and processing, I think those worlds all kind of come together 10 to 15 years from now, where we have I don't think we can underestimate the usage of LLMs to drive efficiency in this ecosystem, just like it's happening in other ecosystems. And that's what I suspect will happen. And I think that the companies that don't have frontier models, but have scale and dollars are going to be, they're going to find themselves having to build those.
Interesting.
But if you throw enough talented engineers, and to go back to what I was saying before, the model is a function of processing, of power, of algorithms, and I think that we have seen that, like with XAI, they put a lot of power towards this, and they ended up with a pretty good model. Now, not as good as OpenAI's yet, but it's a really good model, and they'll refine their algos. But to be leading edge is a very, very big, heavy lift because of how much power and processing you need, as well, of course, as great research models. But I think that many people are questioning the value of these models. I think that is that's premature. I think there's an enormous amount of value to be unlocked if you have a frontier model.
Well, I feel like we keep talking forever, and let's do that sometime. But we have to close this out now. And I'm closing out each episode of this podcast with two questions. The first is, how are you using AI in your day-to-day life? We've actually already talked about that a little, but maybe just to briefly share with our listeners, how are you using AI every day?
I use it for research, specific research around. Like I'll go through and have it help me build or optimize a power stack, for example, and ask that to detail the pluses and minuses of certain equipments. And when I can see their work, it's very helpful for me to drill down again and get better answers. So that's most of my time is on any of the AI tools. I use mostly GPT is that.
And final question, could you please recommend 3 books, reports, or articles to our listeners on any topic, old or new?
So I read a lot or listen to a lot of audiobooks. So I'm currently reading Abundance, which is the Ezra Klein, because now maybe the Democratic Party will accept that we have to build in the United States, and that their dogmatic, ideologically driven approach is not solving any problems. So I was happy to hear that a New York Times person was actually saying we need to build, and we need permitting reform. We need all of these things that haven't been there. I was looking at my phone, kind of my favorite books. The Overstory. These are last 4 years. The Overstory. The 1Q84, which was Murakami book. Those two are like my long read, really most enjoyable. I really love the How the World Really Works, which was the Packlev Smith book.
Buckle Smil.
Smil, yeah, Packlev Smil.
Yeah.
Like I feel like no one should argue on the need for certain types of power until they read that book. Like, unless you have that knowledge base and understand how these things work, then you can't argue for how they should work. Like, there should be like a base level of knowledge in order for someone to enter the debate, which would make conversations much easier and more productive.
Chris, those are fantastic recommendations. Thank you. And I'm a couple of comments on them. First, I'm glad you raised Ezra Klein because I basically, this question I'm asking at the end for book recommendations, I adapted from Ezra Klein's podcast, which is so he asked people the same thing. It's a slightly narrower version, but thank you, Ezra Klein, for giving me the idea for doing this. So I'm glad you raised it. And then I share your enthusiasm for the Overstory, and I'm reading a book by the same author now called Playground, which is really good, which I recommend.
So I haven't read that, but I read his Following Powers' book after that, which was heavy.
I don't know if I've read that, but the Overstory changed the way I think about trees. It's an amazing book, really.
And just like how everything's connected, like that whole idea is so powerful.
And basically, everything Václav Smil writes is worth reading, but he's so prolific, it's hard to read everything he writes. It's amazing. So,
it's amazing.
It's amazing.
Okay.
Chris James, you've been incredibly generous with your time. It's tremendous talking with you. Thank you so much for appearing on the AI Energy and Climate podcast.
Great. Thanks, David. I appreciate it. Take care.
Take care.